Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. The latest trends from the Election Commission show Arvind Kejriwal's Aam Aadmi Party leading in 58 out of the 70 seats in New Delhi. The BJP improves its tally from 2015 while the Congress draws a blank yet again. Indian markets recover from Monday's pullback. The Nifty trades around the 12,150 mark, while most sectoral indices gain, with broader markets being subdued today. Avenue Supermarts trades with losses in today's session after it raised 4,098 crore rupees in their QIP from 4 investors. Government of Singapore, ICICI Prudential Blue Chip Fund are among the investors. And low demand coupled with weak realizations are likely to result in a subdued quarter for Coal India. The stock trades with minor losses ahead of its numbers today. Good afternoon, Neeraj. It's a strong rebound. Nifty at 12,150, I think, very conveniently surpassing 20 and 50-day moving average.
And most components in the green, that's the good part. We have very little red on the screen, and which is quite heartening. And it's been like that for a better part of the trading day on the Nifty, I mean. By the way, some results are getting rewarded and are in fashions. I think the numbers came out. We'll talk about that in a bit. I think that stock is up about 5.5% post those numbers as well. So keep that at the back of your mind. However, this is up in fashions. Look at that spike, up about 5% after the numbers have just come out. We'll get the details up in a bit. Bring up the heat map up on the screen of the Nifty 50 and you'll see what I'm talking about when I say that there is very little red and a lot of green. This is a very pleasing sight for a bull. Also because there are just a handful of losers, and the top loser is Yes Bank, just down about 1.25%, which tells you about how low the selling is in the market today. And conversely, the kind of buying that's happened. Obviously, it's not a lot of heavyweights which have gained too much. The 4-5% gains are to the stocks with the lower weightages, but Gail result reaction up about 6%. JSW Steel, Hindalco bounce back, as does Tata Motors and Maruti Suzuki. So there is a good grid of stocks, some with domestic exposure, some with international exposure, which are doing well. And Reliance Industries is up about 1.7% higher in trade as well. That is that big mover contributing properly in the session today, and a strong move which is helping the index for sure. So in the weights contribution, I think Reliance Industries right up there. Devina, we were talking about this in the morning, that can Reliance participate? It's participating, and with gusto.
Yeah, and that's the reason why the benchmark is outperforming the broader mid-cap space, which is in today's session, while it's still trading higher by about 1/3% or so, not quite matching up to what the large cap index is doing, primarily on the back of those few heavyweights. Coming to the individual movers, and I want to just quickly run through them. Indiabulls Ventures is up about 7.5%. The second day on a trot, Rajat Exports is up about 6%. You've got some interest in some of these retail companies, Future Retail, Aditya Birla Fashion. These are some of the names that have been active over the last few days. Godrej Industries, Godrej Agro are up about 3.5% apiece. What's losing out, Nalco on its results, disappointing numbers, is down about 5%. HEG has seen some selling pressure, and so has Whirlpool. Since yesterday, you've seen some pressure building up, and Varun Beverages has come down to about 812 odd rupees from levels of about 850 just prior to its numbers. Small cap index coming down to that segment, about 0.5% higher. Walkhard continues to do well. This is, I think, the second or third day on a trot that you're seeing these kind of heavy gains coming in on Walkhard. Interestingly, if you look at the December quarter, the amount of pledged shares for Walkhard has actually gone up significantly. So from 4% in the September quarter, it's actually gone up to 24% in the December quarter. Arvind Fashions, as I already said, the fashion and retail stocks are doing well. Indiabulls Real Estate, Metropolis has picked up a bit. Losing out is Sculptra Through. You've got Sun Pharma, Advanced Research down 3.5%, and then the likes of Avanti Feeds gives up about 2.25%. But we're also tracking the futures and options space, and Navneet's going to highlight that for us. Navneet.
Thanks for that, Devina. I think more action today has been seen, at least in the Bank Nifty futures, because the open interest has surged significantly. For Nifty, open interest is just about 2%, but remember, the premium has widened from yesterday's close of 8 to 25 now, and Nifty is trading above its 20 as well as 50-day moving average. For Nifty Bank, as I was highlighting, the open interest is up, I guess, 24% now. That's a significant move that you're seeing. Of course, in Bank Nifty, we're watching out for the 50 DMA on the upside, which is somewhere about 31,540 thereabouts. All right, then volatility has cooled off. Another good sign for the bulls, 2.5% lower. Options data, 12,100 put today has seen aggressive writing. In fact, that's added about closer to 24 lakh shares. And while if you look at the 12,100 call, the writers of that strike are running for cover. Almost 8 lakh shares have been shared there. So that's a positive sign. I think the next level that the traders will be watching out will be 12,200, as the 12,200 call is sitting with maximum open interest. Very quickly then on the stock futures side, Nalco reacting to its numbers, it's down for the second straight day. It's also fallen below the 100 DMA and the futures are witnessing short positions there. And surprisingly, stocks like Sun TV and all, we don't mention it on daily basis, but there's a strong move today, and with the move, it's also moved above the 200-day moving average. Long positions on the future side. So far this year, the stock's up 15%. And what a move Divi's Laboratories has had. It's been registering fresh highs almost every day. Long positions continue, and almost 50% of the quantity traded has been marked for delivery, giving you an indication there is both cash-based buying and also long positions on the futures side.
All right, on to a global update first then. The death toll in the coronavirus has topped 1,000, with the total number of infected cases crossing 43,000. China's Hubei province, which is the epicenter of the outbreak, has reported the most number of fatalities yet. Criticism is mounting over China's handling of the crisis, and 2 health officials have already been removed from their posts. Tom McKenzie of Bloomberg News is joining us right now to get us the latest update on what has been happening right there at the epicenter, and what's happening in the overall scheme of how production is picking back on track. Tom, highlight the latest details that you have for us.
Well, you ran through the top numbers there. I would stress that the rate of infections has actually slowed again for another day. So that is giving some modicum of optimism that even if we're not at a point where this virus is starting to peak, that is still a trend. That slowing rate of infections is a positive trend. Of course, we need to see that sustained over a number of days before we can call a peak, but there are those experts in the UK, for example, at the London School of Hygiene and Tropical Medicine, who think that this could potentially peak around mid to end of February. So those are the numbers we're looking at very closely. As you say, very unfortunately, the deaths keep rising above 1,000, 103 just out of Hubei province alone. In terms of regionally, we're seeing around 42 confirmed cases in Hong Kong. About 2,000 people, more than 2,000 people in Hong Kong are quarantined. Over in Singapore, you're looking at about 45 confirmed cases. They told us, one of their ministry officials, that they expect to see a 30% hit to their tourism industry on the back of that. Over in the US, you've got a 13th confirmed case as well. So the numbers keep rising, but again, the pace of cases and infections, if that starts to stabilize, that could give us some optimism that maybe these very draconian and strict quarantine measures that China's put in place, effectively restricting the movements of 60 million people, maybe they are starting to have some effect. But we need a couple more weeks before we can come to any firm conclusions, according to the experts.
Right. And Tom, what about the extent of business that's restarting in China?
So I've been speaking to the likes of Huawei, Meituan Dianping, which is a big e-commerce company here. They are starting to get their workers back, but in a drip kind of fashion. They're not at full force yet, and they won't be probably until next week at the earliest. And you look at the auto companies, the likes of Ford and Tesla, they have started production up again this week. But the likes of Volkswagen, Nissan, they don't think they're going to be up to full production until next week at the earliest. Look at the retailer sector here. We saw house prices, or house sales, I should say, for the first week of November or February, first week of February, falling 90%. So that gives you some indication of a crucial sector and the pressure that it's under here. Rabobank says things like retail sales, food sales over the period in which China was closed, effectively this extended Lunar New Year, that could see a reduction in sales for those sectors by about 125 billion US dollars. So we're still trying to get our heads around the economic impact, even as businesses and workers start to go back to their offices. Many people, of course, still working from home.
Exactly what we're going to be talking about next. Tom, thanks very much for joining. And in fact, when we're talking about the economic impact, Fitch Ratings believes that it is too early to assess the economic impact of the coronavirus on the Chinese economy. In a scenario analysis, Fitch expects China's GDP to grow this quarter to be less than 6%. Listen in to Andrew Fennell. He is the Sovereign Ratings Director at Fitch Ratings, who spoke to Bloomberg Television earlier in the day.
We think it's frankly too early to fully assess the economic impact of the coronavirus on China's economy this year. So what we're doing for the time being is running some scenario analysis of what the various scenarios could be. And in our baseline scenario, which is effectively a SARS-like, SARS-scale shock on China's economy, we estimate that would take Q1 GDP growth this year to about 4% and full-year economic growth down to about 5.5%. And that's versus our baseline, which was previously 5.9% for the full year 2020. Now, obviously, if you assume a smaller intensity or a longer duration, that also has impacts on China's economy. So basically, the scenarios range from about 5% growth this year to about 5.7, depending on what you assume. We continue to, unless we have evidence that would suggest otherwise, as a temporary shock for China. And so under our most severe scenario, that would take growth this year to about 3%. Growth this quarter to about 3%, and full year growth in 2020 to about 5%. But assuming that you continue to view this as a temporary shock, it probably wouldn't have a great deal of effect on our sovereign ratings. That's because basically our rating story for China for this year was previously that the economy is slowing, but the authorities' greater use of fiscal easing measures in favor of more aggressive monetary easing measures was basically constructive and supportive for the sovereign rating profile. Now, if we were to see that policy easing measures were to veer much more in favor of significant credit easing and fiscal policy was kind of sort of waned, well, that could have potential negative rating pressures on China.
Well, uncertainty is the word. Let's get in an important market voice in that scenario. Vaibhav Sanghavi of Avendus Capital joining us right now on the show. Vaibhav, as always, good having you. Thanks for joining in Neeraj here. Good afternoon. What's your sense, Vaibhav? There is a bit of uncertainty. The equity markets for now seem to be shrugging off any potential fears of the coronavirus. Would that be the right thing to do?
No, of course, see, that is one of those kind of variables which, to be very honest, nobody has a perfect clue about, right? I mean, in terms of how much it can get worse from here and what is the kind of economic impact which it may have. But one thing is for sure that, this is kind of one-time impact which we may see probably in this quarter or the next quarter. But beyond that, I don't think that should have a continual impact. So my sense is basically if the markets are looking at as a one-time affair, then they will probably shrug off those kind of fears, in the shorter end. So, and that's why you are seeing markets probably globally stabilizing and here also recovering smartly from the low levels. So up until, you have these quarterly numbers which are probably declaring kind of results. Markets are more focused on that and probably the risk on kind of environment globally which is there, which is just aiding the kind of market movement.
Flows, what about flows, Vaibhav? I mean, we've seen the flows into mid-cap and multi-cap schemes really pick up even in the month of January. What about HNIs or institutions putting money into products that you guys have at Avendus? Has there been an uptick in flows?
We are pretty steady kind of at the AUM levels which we were earlier as well. Though you are right that in terms of the last month, if you see the mutual fund data as well, there has been some considerable flow into the mid and small cap. My sense is basically looking at the kind of huge amount of disparity in terms of the valuations, you are seeing some amount of money getting deployed there. However, whether it will continue for a longer period of time is something yet to be seen, because what the tendency of the mid cap and the small cap moving pretty quickly and just bridging that kind of valuation gap, is far high. So it takes pretty short while to pretty much bridge that gap, and then we again would be looking at an environment where mid caps is something which is kind of expensive in terms of valuation, and in the environment where we've always maintained that since GST and the formalization drive, the larger guys are continuing to grab market share over a longer period, and we do continue to see that those guys will consistently provide kind of steady earnings growth. So it's just a call that that short term, medium term, probably you might see mid cap, small cap performing, but we'll revert back to the large cap performing purely based on the business fundamentals.
At least so far, since we've been talking about the broader markets, I just want to highlight so far only 30 sessions this year. The broader markets have outperformed. We have seen mid-cap index gaining about nearly 7%. Small cap index is also up about 6.5%. But Vaibhav, in terms of the frontline indices, we've not done too much this year. One would like to know the underperformance that we've seen from the broader markets, at least for the last 2 years, and the outperformance so far of this year. Is this likely to continue, or there'll be a time where you see more of funds once again being deployed to those expensive large cap stocks?
Sure. See, there is some part of merit to say that it is reversion to mean back, and at the same time, we need to understand that from November, December onwards, there is a shift between from growth to value. Right, and whenever that happens in terms of the value shift, you always find that kind of battered companies who are depreciated in terms of the stock values, and people find value into those kind of companies will perform for a shorter period of time. Having said that, my thesis is basically whoever gives you better earnings growth, whether it is large cap or mid cap, you will continue to see performance coming up. I'm not a very big believer of in the current scheme of things when your passives are pretty strong, in a believer that your mid cap should be trading at much higher premium to the large caps. In fact, it's the otherwise, where when passives are strong, you will generally find that large caps will continue to do well in the market conditions. So we do expect that the preference to more large cap should come back probably in a couple of months again.
Okay, remains to be seen. Vaibhav, but you also mentioned about the earnings. We're almost at the fag end of the earnings season. Would you agree, though the expectations were already scaled lower due to the economic slowdown that we've been facing, but still the numbers have not looked that bad? Would you then feel that the earnings too have bottomed out, and going into FY21, that every year we talk about high double-digit earnings growth, can that come by in FY21?
No, of course. See, one big reason we have to understand is basically that the corporate tax cut has really helped the earnings story. Now, whether it is 20%, 25%, with the whole state is estimating in terms of the next year earnings growth, we do believe that 15% is something which you can work with at least for the next 2 years. And if that is the case, then 15% by no kind of extent, by no circumstances, it's a small amount. I mean, it's a very good, decent earnings growth. And if that happens, then the market should continue to be buoyant over the next probably 2 years, provided you don't get any big shock from the global side. So my bet is towards having consistent earnings growth for the next 2 years, though around the region of 15%, and thus will lead to a market growth by about the same amount. I'm not betting on the PE growth though as well.
All right, Vaibhav, we'll leave it at that. Thank you very much for joining us this afternoon with your thoughts. On to some earnings then. It was a subdued quarter for Kajaria Ceramics with a mild degrowth seen in its top line and bottom line. The company has mentioned that the demand environment for tiles continues to remain sluggish. Let's discuss the quarter gone by with Mr. Ashok Kajaria, the CMD of the company, who's joining us right now on the show. Mr. Kajaria, thanks very much for taking out the time. It's a tough environment, and we're seeing that as a reflection in the numbers. Could you talk us through what were the key highlights of this quarter? I believe sales volumes also remained largely muted. You saw a reflection of the sluggish top line on the bottom line as well. Talk us through how things are likely to shape up going forward.
See, what we have done, first of all, the market was very tough. The banking, as we all know, is very, very tight. The banking, no money is being given in the market. But what we have done to make the path correct, we have not compromised on the working capital. That is a key factor we have been focused on. And secondly, we are trying to increase the spend on brand, because that what will ultimately help us, because as we go forward, markets improve, the branding will help us going forward. And we are very confident that going forward, from April onwards, things should be much better.
Okay. How much is the increment in your advertising and branding expenditure this quarter?
See, this year we will be roughly spending about 100 crores. But going forward, we are looking at how to increase it more and focus on certain regional areas where we feel more focus is required, like various states like Maharashtra, Tamil Nadu, Karnataka, where we want a stronger presence going forward. So we'll be spending much more than what we are doing now.
So the expectation of a volume growth of 6% was what the street was pegging in, and the volume growth has come in sub that. When do you see a pickup in the volume trajectory for yourself? Do you expect that also to take place in a quarter or 2 quarters?
When we say volume growth of 6%, around 6% for the year, that automatically, if you work out the numbers, it means about 10% plus in the fourth quarter. But going forward, we are looking at a much better scenario. Things are improving on the ground level. And I'm sure with the steps taken by government to step up the housing by infusing a fund of 25,000 crores for the uncompleted projects, improvement in banking, definitely future looks much, much more positive.
You're saying 10% in quarter 4 volume growth is something that's achievable for you, right?
Approximately around that, because that is how we'll reach a number of 6% annually, if you see that.
Sure, but that's the street expectation, not necessarily you'll clock it. So that's why I'm asking you whether that's a realistic estimate that the street is putting out for you.
Yeah, it's a realistic estimate. It's a realistic estimate.
Okay. What about margins, sir? Margins saw a bit of a contraction on a year-on-year basis. What impacted that? And then do you feel that you'll come back to levels of about 15-16% in terms of margin performance?
Margin has been around 15 point, lower end of 15.12, something like that. But going forward, we are looking at 15 to 16, but closer to 16. Because the fortunate part is gas prices have been stable, and going forward it will further come down. Because it is linked, the long-term contract is linked to Brent, so it will further come down going forward. So we are looking at a scenario where the margins will be closer to 16.
Okay. Sir, the top line was subdued, and that's largely due to subdued volume growth, which we've already spoken about. But talk to us on realizations as well. I think they too have fallen. What were the realizations in the quarter gone by, and what's the outlook that you can share? Is the situation improving with regard to pricing in the current quarter?
See, pricing may not improve. The cost will come down. Pricing may not improve because there is too much competition as far as the pricing is concerned. So I won't say that I am looking at a scenario where pricing will go up, but definitely the cost has will come down. Nothing is going up except the gas which have been, and gas, as I just said, has constant, and going forward it will come down. So the margins will be intact, but I don't see a scenario where prices per se will go up.
What were the realizations, sir, in the quarter gone by?
Pardon me?
What were the realizations in the quarter gone by?
I didn't get your point.
Okay. What I meant was
the quarter gone by, yes. The realization has come down by 2% in terms of revenue, and the volume growth has been 1%. If you look at the overall scenario, it is down by 1% correspondingly.
Okay. So there was an expectation when GST was getting implemented that organized players like you would garner more of market share. Could you just give us an idea from pre-GST era to now, what has been the market share gains for you?
See, if you look at the total industry size is about 28,000 crores, out of which domestic market is about 20,500 crores. And 7,500 crores was roughly the exports last year. Kajaria has done about 2,800 crores of tiles last year and 200 crores of faucets and sanitary ware. If you look at that number, our share in the entire industry in the domestic market has been close to 13.5%. And not only Kajaria, I think Somani, Kajaria, Asian, Granito, Johnson, we have all gotten market share from the unorganized players. And going forward in the next 2 to 3 years, I think their share will further go up as far as the organized sector goes.
And due to more compliance, you can correct me if I'm wrong, I think from April this year, there will be e-invoicing. As a result of that, do you expect more of market share to come to organized players like you?
Absolutely correct. It has already started in a preliminary manner from 1st of February with companies with 100 crores and above. And from 1st of April, it will be mandatory to put that e-invoice right in the portal. Secondly, what they have also done correct, if you don't give the GST money, after 2 months, that's 60 days from the date, you don't get an e-way bill generated. So they are tightening up the norms, which will definitely help the organized players to grow and to take more market share.
What about the liquidity pressure which the industry was already facing? You said working capital has been fine. What about the receivable days?
Working capital, Kajaria has not compromised, as you can see from the chart. And going further down, you will see that we will match the numbers from March 19th.
Okay, so that should be around 64, 65 days?
That is one area we are not compromising.
Okay, 64, 65 days, that's somewhere around...
yeah, it will be much lesser than that.
Oh, okay.
No, it will be much lesser than that in March 20.
What would it be then, sir?
Close to March 19.
Okay.
Whatever was in March 19, we'll match that.
I don't have the number with me, so if you could just give me the number, sir.
I don't have the numbers straight away with me, but definitely it was much lower. It was much lower.
Okay. Just last point. You've also declared an interim dividend of 3 rupees per share. Could you also just highlight what are the cash on the books currently?
What are the?
Free cash that you have on the books.
What's the question?
I've said that you've announced an interim dividend, sir.
We have a cash surplus of almost...
yeah, go ahead.
Yeah, we have a cash balance of almost 186 crores. 186 crores,
okay.
Roughly.
All right. Any plans to deploy that money?
Kajaria is a debt-free company with a cash balance of 186.
Okay. Any plans to deploy that money post-dividend?
It will only be used for our existing growth.
Okay. Yeah, that was my question.
No. Right now what we are doing is we are growing, and if we have to grow, we will use that money. But going forward, there will be much less of a capex. In the new environment, there will be much less capex in the coming years.
Okay, got that. Mr. Kajaria, thank you so much for joining and really appreciate you taking out the time. All right, that's the management at Kajaria Ceramics. So while this quarter seems to be a little bit of a damp squib, things should start picking up, primarily on the back of the 10% volumes that he's hoping to clock in Q4. Realizations may not pick up on the back of increase in price rises, but on the back of keeping costs under control. And no more major capex that the management is looking to make. They've got healthy cash on the books, so all that looks fine. As of now, the stock's not doing a whole lot much, 545 for Kajaria Ceramics.
Okay. That's Kajaria Ceramics for you. And remember, this space particularly has not done too well due to the economic slowdown, and particularly got to do with the slowdown that we've also seen in the real estate market. All right, but moving ahead and speaking about numbers, weak thermal demand and a prolonged monsoon is likely to impact Coal India's operational performance this quarter. Nikki Mirchandani is here to take us through what the street is pricing in. Nikki, over to you.
Thanks, Navneet. Well, we aren't expecting great set of numbers coming in from Coal India. Top line performance, that's expected to decline by as much as 8.5%. And the number that we're working with is a little less than 223,000 odd crore. If you look at the operational performance, expecting a downtick of as much as 26%. A number that we're working with is around 5,000 odd crore. Margins are expected to contract to 21% as compared to nearly 27% in the corresponding quarter. And profitability, that too is expected to take a hit by as much as 5%. The weak thermal demand and the extended monsoons essentially are expected to weigh down on the volume performance of the company. Volumes are expected to come down by as much as 8%, and operationally too, realization will play a part in, will have a bearing on the earnings performance of the company. Lower realization essentially will be driven by e-auction prices, which have come down by 10% year-on-year basis. And things that we'd like to watch out for would be the dividend policy going forward for Coal India, and any kind of amount that it declares for this quarter, which is expected to be higher than the normal. Also, we're looking at the commentary coming in terms of the production guidance that it has for FY20 and the long-term goal that it has set for FY24 for that matter.
Thanks for that, Nikki. And well, talking about Coal India, it's an interesting stock. I'm sure the shareholders also await for the earnings due to the dividend which the company declares. Remember, it has a good dividend yield. We've seen in the past Coal India also declaring dividend of about 10%, and I guess that was back in 2014. Now, why I'm highlighting this, the futures of Coal India were trading at a discount until yesterday. And finally, we saw the convergence in yesterday's just ahead of the numbers today of both the spot price as well as the futures price. So yesterday, when you saw the spot falling about about 3.3%. The futures ended flat. Now, why is that happening? I'll just take you through that. So since the start of the series, if you, of course, Street is expecting a dividend of more than 5%, which is roughly, if you look at yesterday's closing price, is at 8.9. And remember, when a company declares a dividend, which is at 5% or more than 5% of the market price of the previous closing of that stock price, the adjustment, which is a corporate action in this case in the form of dividend, is made in both cash as well as the futures and options contract. And we discussed that in the morning. Adjustment for REC is made in today's session. And of course, Gail also declared dividend, which was 5% of the market price. I just want to highlight the action because since the start of the series, Coal India futures, and that's from Jan 30th, they've been trading at a discount. So this is the future, the blue line, and white is the spot price. Just yesterday, as I was highlighting, just ahead of the numbers, you did see the prices of future as well as the spot converging. Now, what does this tell you? Ideally, a trading play, a dividend play is you buy in the cash and you short the futures. But if the traders are not aware of this exchange rule that if your dividend is 5% or more than the market price, and if you still stay short on the future side, you will end up making losses because the reason is adjustment is made even in the futures and options contract. And that's precisely what happened because the Street is expecting dividend to be declared by Coal India could be in the range of 5% or higher than that. So we'll be watching out for that number, and we're working with a number of almost 8.9 rupees per share. Back to you, Neeraj.
Well, we'll watch out for Coal India tomorrow. It'll be an interesting stock to monitor, and what's the quantum of dividend that they give. In fact, most of these PSU names would be in focus for the kind of dividend that they give. Just before we get to our experts, I just want to mark stocks which are trading at life highs, and amongst others, Nippon Life AMC is now at 407 rupees a share. As much as people would have wanted to believe that the change of management will not impact, the stock has nearly doubled from the levels that it was at when this happened. I remember the stock was at 215 and there was open offer given out at 230, which was a small arbitrage then. If you just pull up the last 6 months or last 9 months of Nippon Life AMC, 6 months, the stock has given 75% returns, trading at fresh life highs for itself. Do watch out for this one. Do watch out for Relaxo Footwear. That one is up about 4.5%. Inox Leisure at 6% higher is trading at life highs. And two names which don't cease to amaze almost anybody, GMM Pfaudler and Honeywell Auto. Both of them, since they've come out with good numbers, are only seeing traction. GMM Pfaudler in the last 1 month has given returns of over 65%. That's just quite a telling statistic of how an expensive stock has actually seen some significant buying because of the kind of growth that the company is saying it will clock in. For all of you who missed that, I urge you to log onto our website and try and hear out that interaction that the management had with us. But since all of these stocks are doing well and the markets are doing okay too, get in our experts to talk about what to do in a scenario like this. Start off the conversation with Amar Singh of Angel Broking with his perspective on the trade on the index. Amar, in the morning, not too many people were gung-ho about going long, but now that the index is up about 1%, nearly 1%, what do you do now?
Yeah, I would say that the markets open with an up gap and they are trading positive, and even towards the end of closing, it's up by almost 100 points on the Nifty. So clearly, I would say that yes, there is this upside momentum, but on the upside, 12,150, 12,200, that's a zone of resistance. So one can look at booking profits, and yes, any dip can be used as a buying opportunity. Earlier, 11,950, 970 was a crucial zone of support. Now that has moved up to 12,000, 12,050 zone. So ideally, dips can be used as buying opportunity. And once we start seeing the index trading consistently above the 12,200, that is the Fab futures, it would lead the index towards the 12,350 mark or so.
Okay. So in light of that, the question mark would be, what should the average trading strategies be? But Sacchitanand Uttekar of Tradebulls also is with us on the show. So let's first get his index view as well. Sacchitanand, would you be trading the index at all, either the Nifty or the Nifty Bank?
Good afternoon. Yes, index trades should be deployed. In fact, we've really seen a meaningful pullback from the levels that we saw post-budget. And in the last three trading sessions, Nifty has been oscillating within a proper range of 12,200 on the higher side, and 12,000 has been acting as a support. But if you look at last 3 days, we have really not seen any meaningful movement outside this particular range. Yesterday we saw an attempt to breach below 12,000, but that particular attempt was negated, and again the index is oscillating within the range. So the bounds are really clearly defined, 12,200, unless we don't see a closing above that, we may not see a follow through movement. But on the lower side, 12,000 is also a very conclusive support. So probably on the short side, some trades can be deployed since we are trading very close to the higher bound of this particular range. So on the spot, a stop loss should be placed at 12,170, and some shorts should be deployed. 12,030 is the lower bound wherein these shorts can be covered, and again the strategy should be reviewed. If you look at the option bounds, they are equally divided. In fact, around 29 lakh shares are there in the open interest on the 12,000 side, and on the 12,200 it is as equivalent towards 20 lakhs. So probably we may see directional move only coming outside this particular range. But as of now, I think the sweet spot is available for some fresh shorts. The stop loss for the trade should be 12,170, and a target would be around 12,030 from a trading perspective.
All right, Siddhartha Khemka of Motilal Oswal is also joining us on the show. Siddhartha, good afternoon to you. Let's get in your call on the index as well.
Yeah, good afternoon. So if you look at the overall market, we have been expecting a range bound kind of a movement once the big events that have now gone past, the budget which somewhat disappointed by not giving the big bang reform stimulus that the market was expecting, and then you had the result season going around, which is again more or less in line with expectation. There is not in much of a positive surprise, and there is also not much of a surprise on the downside by most of the heavyweights. So more or less in line with the expectation numbers that we have seen so far. Having said that, if you look at the overall valuations, we believe even after factoring in a 20% plus growth for FY22, you look at Nifty P of about 18.5 times, which we believe has further risk. So the earnings growth has downside risk, and that, to that extent, we could go up from here. So to that extent, overall our view is Nifty would remain in this range. We believe the valuations are fair. There could be some liquidity driven movement in the heavyweights, but as we are seeing, there will be select pockets where the liquidity is chasing, and this is a typical market where quality and growth at any price is being followed, and very difficult for a fundamental analyst to suggest that even at this price to go ahead and buy those quality stocks. So a lot of neutrals and avoid kind of ratings even for the high quality good growth stocks.
Okay, some stock ideas then for trade this afternoon. Sacchitanand, let me come to you first.
Well, keeping a combination of long and short would be ideal. In fact, on the long side, the data which is developed on Sun TV looks really promising. After November, this is the first time where the stock is trading above its 200-day exponential moving average. If you look at its weekly RSI, it has turned up from the 50 zone, and it has managed to breach its previous swing high on the RSI. So probably we may see a good follow-through action here. So 505 till 500 looks like a decent zone wherein the stock should be accumulated. On the higher side, we are expecting a move towards 530. The stop loss for the trade should be placed at 493. So this is on the long side. On the short side, the kind of data that is getting developed on the escorts, wherein the stock has been in a very strong, bullish cycle, wherein we have been seeing long unwinding getting continued up till now. But if you look at the price formations, as in every day the price action is narrowing down. If you look at the daily RSI, it is quoting somewhere close to 84, and it is giving an indication of a high overbought kind of a territory. So we're expecting that there could be a cool off in this particular counter. On the short side, some shorts can be deployed here at around 870. The stop loss for the trade should be placed at 880, and a pullback move towards 840 could be seen in a week or so.
Okay. Amar Singh, what are your stock ideas for the day?
Yeah, I would say the first stock to look at is HDFC AMC. This is one stock, if we look at it, what we are seeing here is that the stock is in an uptrend. And technically looking on the daily charts as well as the long-term charts, the stock continues to trade positive. So this is one stock one can definitely look at. So at the current level, so 3,355 levels, one can look at entering the stock with a stop loss of 3,275 and a target of 3,530 on the upside. And the second stock one can look at is Reliance Industries. This is one stock, if we look at it, what has happened in Reliance is that it did correct significantly from almost 1,600 levels a day. It's the day after the results were announced on Monday. So now it is seeing a pullback, and technically if you look at the long-term charts on the monthly charts also, the stock continues to remain positive. So this is the second stock one can look at. So ideally Reliance is a buy at the current levels with a stop loss of 1409 and a target of 1540 on the upside.
Okay, so we'll watch out for each of these names as well, and let's see if Reliance indeed does manage to climb further from where we are right now. Siddhartha, we were looking at the list of companies which are doing very well in the last few sessions and trading in near highs. The exhibition space is doing well. I mean, PVR notwithstanding, Inox Leisure with this 6% up move is trading at highs too. What have you guys made of the results? What's the verdict on these companies from the valuations that they're trading at right now?
Yeah, Neeraj, so we cover only PVR in the exhibition space, and we have been quite bullish on the stock for some time. The stock has already moved up, and now we are seeing the follow-up after the results from Inox Leisure as well. So if you see, there have been a spate of good releases from the industry, and that has helped them improve the overall numbers per se. Plus the numbers supporting from the ancillary revenues has also been very good. In the current environment, if you see, there are few sectors where you are seeing the kind of growth these companies are reporting. More or less, it's a quasi play on the consumption theme where the consumer spending is consistently there and is not getting impacted by any of these events around, either on the global front or on the domestic front, where you are witnessing the slowdown impact on the rural side. So these are mostly the urban centric plays where you have witnessed continuous footfalls and the improving visibility. So overall valuations are at on a little bit on the higher side, but compared to that, if you see the growth, the capex plan, at least for PVR, the aggressive growth plans that they have, that should keep the growth momentum continue. Again, as I was saying earlier, a lot of these stocks are trading closer to the fair valuation because they have moved up sharply. While we continue to have a positive view from a long-term perspective, the upside in the near term could be limited.
Siddhartha, do you guys have any of these dairy companies within your coverage? We've seen quite a wealth destruction in a couple of others earlier, and today, because of an independent tweet put out, Parag Milk is down about 16% as well. So I haven't quite looked at the report there, but it's certainly impacting the stock. Do you guys have coverage here?
I have not looked at any of the dairy stocks nor at the Twitter that you are talking about.
Okay, but if you haven't looked at the dairy stocks, then anyways you wouldn't know. Fair call. The other point of gain that we're seeing is all that's happening in all of these retail focused stocks. Siddhartha, now we keep on talking about Trend, we keep on talking about Avenue Supermarts. What about Aditya Birla Fashion and Retail, which is not brick and mortar but brands, or for that matter Phoenix, which has come out with a fairly decent set of numbers?
Yeah, Neeraj, so we were talking about this sector some time back on your channel, and so that's a space again we are liking. Again, another consumer play in a different way. So we are seeing some of the brands for Aditya Birla Fashion doing very well. The Van Heusen growth picking up, and again the stores profitability has gone up. In this case, you have Trent, which is trading at a very huge premium in the sector. Then you have again on the mid mass market segment, you have the V-Mart, which has also done well. Aditya Birla is somewhere in between in the offering and is now picking up in terms of numbers. So that is again a sector that we like. We continue to have a buy rating on Trent as well as Aditya Birla Fashion and Retail. But if you see the kind of target price for Trent, we have about 700 rupees of target price, which is just 5-6% away. But we believe Aditya Birla, there is further scope for upside even at current levels. We have a target price of 300, which gives about 15% more upside from the current levels.
Okay, that's the retail space. Remember, Avenue Supermarts yesterday rallied about, closed at least with gains of 8 to 8.5%, and it also pipped market cap of Nestle India. I think with today's correction, they would be at par, but Avenue Supermarts QIP was quite successful. They raised about closer to 4,000 crore rupees, which they would be using it for expansion. And remember, I think there is 2.5% stake more from the promoters to be offloaded in order to meet SEBI guidelines of bringing the promoter's stake down to about 75%. Sacchitanand, come in here with the recent. Of course, the stock's been trading at all-time high levels. Considering the interest market has in this stock, would you advise buying it on every correction?
Well, certainly, this is one counter which, which has been in a very strong secular uptrend, and every time we have seen consolidation, those have been healthy signs of the trend getting evolved and continuing on the higher side. So even from a trading perspective, we are expecting that the stock should rally towards the 25.85, and even on a decline, it should be accumulated. Now, this entire structure will be void in case 2200 on the lower side has been breached. So probably one can still hold on to this particular counter, and every sign of consolidation would be healthy for this particular counter, and it should be every decline should be utilized to add some more positions to it. There is no negativity in the counter. Even on the RSI, we have really not seen any diverging moves. So probably a correction or a consolidation would be a good opportunity to accumulate the stock.
Okay, the other stock which has had a good move and it has sustained the move today is Indiabulls Housing. Of course, it's a high beta risky counter, but with today's move of almost 10%, it's crossed its 50 and 100-day moving average. Amar Singh, at 355, would you take a bet on Indiabulls Housing?
I would say that not at the current levels, because if you look at the stock has got some resistance coming around 365, 370 odd levels. So I would rather look at booking profits, or someone would recommend, if someone has a position, then he can hold on to his position, because those are levels where the stock will definitely run into selling pressure.
Okay. Siddhartha, just before we thank you, any thoughts on these auto component results that came out, and would you stay away from buying into a Bharat Forge or a Motherson Sumi, or do they provide value here?
So both the companies came out with numbers, and both the management talking about the pain in the near term. We have seen the results that they have announced were much below expectation, and again both the management saying that things are bottoming out. So if you ask me, near term, I think the pain is definitely there on the global front. The economic slowdown, the impact from the coronavirus to the auto sector supply chain, that will be seen in this quarter. Then you have on the domestic front the BS4 to BS6 transition. So a lot of headwinds in the near term. So not a very clear picture in the near term. If things do bottom out from here, value is definitely there, but I would suggest to wait out for one more quarter. I think even Q1 will not be as good a quarter, and that would be a good time for long-term investors to look at these stocks.
Right, Siddhartha, we'll leave it at that. Thank you very much for joining us this afternoon. That's Siddhartha Khemka of Motilal Oswal with his views joining us this afternoon. Onto the market once again, and looking at a few stocks making decent moves today. One is a Relaxo Footwear. Relaxo Footwear is up about 5% right now. It moved up about 7% in intraday trade. And then from there, now it's up closer to 5%. Apart from that, Gail is showing you a strong move of about 6%. You've got individual counters within the broader market space. Indiabulls Housing, which is now showing you a 10% pop. So that one is something you need to keep an eye out on. Lakshmi Vilas Bank and Shilpa Medicare, both of them 10% apiece. Wockhardt is up another 10%. So after yesterday's big move, that stock once again looking stronger in today's trade. Shilpa Medicare and Wockhardt, Sacchitanand, do you track any of these two?
Well, Shilpa Medicare, I don't, but Wookard has been in momentum since last 2 trading sessions, so it has been on our radar. But if you look at the overall structure, what we have been observing here is that there's an accumulation pattern which got triggered today. So if you look at the entire structure for the last few months, it looks like a rounding bottom with a price target which is placed somewhere close to around 450. So in case if someone is holding to the longs, the stop loss should now be trailed to around 373, and an eventual target towards 450, 455 could be seen. So clearly a buy side trade, and it should meet its target in a couple of days or so.
What a move on Inox. We were just talking about some of these exhibitors, and today is up about another 5.5%. Just less than a month ago, I think, a month and a half ago, the stock was at about 385, went down to levels of 365, and from now at 467. So you're seeing that kind of big up move that the stock is seeing. 1 month is up about 21% for Inox Leisure. Sun TV2 is up about 5% right now. You've got Rallis, which is up 5%. Indiabulls Ventures at 175. Indiabulls Real Estate another 5%. So a good move coming into all of these companies.
And can we just pull up Siemens? I guess the numbers have just come by and the stock's seen a sudden spike. Oh yeah, the numbers are actually being flashed there on your screen as well. EBITDA is up 10%. And just after the numbers came by, you are seeing that buying interest. Profits are up 15% at 262 versus 228, which was seen in the corresponding quarter. While the top line growth is muted, it's down about 5%, coming in at 2,669 crores. Sacchitanand?
Just the point, the margins at 12.6% versus 10.9%. That's the kicker, I think. So the better margins have done so well, and as a result of which, the bit of a spike.
That's been the trend, I guess. The top line growth for most of these companies have been muted, but the focus this quarter has been to, the operational efficiencies that they've exhibited. A lot of these companies have improved margins on year-on-year basis. Sacchitanand, a quick thought on Siemens, technically on the charts with the move. Is there any trade?
Well, since last 3 trading sessions, on the price front, we have really not seen any movement. But if you look at the open interest data, it looks like there have been healthy shorts which have been deployed since last 3 trading sessions. We already saw a smart pullback, from the budget day, and somewhere, it is quoting that there is some resistance which is visible around 1530. But on the lower side, I think 1490 would be a critical level. In case if that particular level is breached, then probably some shorts can be opened up. So a sell below 1490 and the stop loss for the trade should be placed at 1522. The downside remains open till its 200-day moving average, which is placed somewhere close to 1400. So it's a big downside, but I think it's better to be on the conditional side. In case 1490 is breached, then we can deploy some fresh shorts.
Okay, that's Siemens for you, 1512. I wanted to talk about Amar, if you have any call on any of these names from the Indiabulls group, Indiabulls Housing, Indiabulls Real Estate, Indiabulls Ventures. I know it's a bit tricky to be in any of these stocks, but from a trading standpoint, because of the momentum in these stocks, do you feel that tidily one could take a position?
Yeah, looking at Indiabulls Ventures, I would say this is one stock which seems to be consolidating and has bounced back today. So this is one stock one can look at. Currently it's trading around 175 odd levels, so it has a potential to rally towards 188, 190 levels, and the stock has got very strong support coming around 160 odd levels.
Deepak Fertilizers also is up today. I think fertilizer stocks on and off have been active in the last 1 week or so. So today's session sees Deepak Fertilizers gaining by about 4.5 odd%. Rallis India is up about 5 odd% as well. You've got CCL Products, that's another stock that's up about 5%. But anything within the fertilizer space, Sacchitanand? RCF, National Fertilizers, Chambal Fertilizers, Deepak Fertilizers?
We've really not been tracking this space for a long time now, so I'm really sorry on that.
What about the specialty chemical segment, which is the hot topic that we've been discussing all through today, yesterday? Do you feel that there's any interest here in stocks like Deepak Nitrite, UPL for that matter, PI Industries, anything that comes across?
Well, UPL, certainly yes, we have been tracking this counter, but if you look at the entire structure, it looks like, there's a good pullback move which has been initiated. And if you look at last 3 trading sessions, the stock is finding itself, difficult to surpass the 580, 585 kind of a cluster. So probably, a very conditional one. In fact, I would rather book my profits in case if someone is long in this particular counter. Shorts can be deployed only in case 566 on the lower side is breached, and probably we may see again a swing towards the lower end, which is placed around 520. But as of now, I would pass it. A sell will only be triggered in case 566 is breached on the futures.
All right, in fact, let's take that conversation forward. The coronavirus impact is likely to be felt across the supply chains in the world. And while there might be negative disruptions for companies which sell products that were being imported from China, there could be a positive impact as well. One such space which will have both positive and negative impacts is the chemical and specialty chemical space. Joining us now to talk about this in detail is Rohan Gupta of Edelweiss Securities. Rohan, thanks very much for taking out the time. Obviously, each segment will have a different implication altogether. You have the commodities chemical segment, then you have the specialty chemical segment where to a certain extent, not all players are completely dependent on China. How does the dynamics play out for each of these segments according to you?
Yeah, hi. As you rightly mentioned that each segment here, even in a chemicals space, will be affected in a different way. So we have some of the user industry of like agrochemicals, which are dependent on some of these intermediates being supplied from China, that in our view can be negatively impacted from this virus going on. And I believe that in China, overall supply chain will get disrupted. More importantly, it should be visible after March. Between March and April, when there is a huge demand for all these agrochemical intermediates, then there can be short supply from China because of this issue, because I see that the plant in China still will take some time to resume the operation. There may be labor shortage and there may be supply side issues, logistics related issues, which will affect the smooth availability. So agrochemical, first of all, I'm talking about the industry which is going to be negatively impacted in our view. Indian agrochemical industry depends a lot on the supplies of raw material, intermediates, bulk chemicals from China. And if that happens, then yes, we may see in the season, in Kharif season, which will be starting from April onward, there may be some price increase may happen. However, we see this year is a good year from the farmers' point of view. We have been very positive on the Rabi crop outlook and also expecting a good Kharif crop outlook. So if these companies, though they will see some cost pressure, and if they can increase the prices to the farmers, then they will be better off. But yes, in general, on a domestic agrochemical companies who are dependent on China, depending on their dependency on at what level they are dependent on raw material supplies from China, they will be impacted. Company like Dhanuka Agri, Rallis, Insecticide India, all these companies will be get impacted. Even the global players like Sharda Cropchem, who is completely dependent on China for their global supply, will get impacted because of this. On other side, on a positive side, I see that commodity chemicals.
Rohan, just before we move on, just before we move on to the positive side, I'm guessing it's difficult to quantify the impact because we wouldn't know what's the extent of dependence and how much of the raw material would already be in place for these companies, right? So the major losers, as you've said, Dhanuka, Sharda, Rallis or insecticides, we won't be able to quantify the impact as yet, right?
Yeah, you're right. It will be dependent on the company's product portfolio, and as I also mentioned that this year we are entering into a Kharif crop where the farmers' profitability will be better than what it was last year. So if these companies, because the impact will be across the industry, it will not be very company specific, and if the industry is able to take the price increases which is sufficient enough to offset the cost increase, then there won't be any pressure on margins. Some of the companies may see some raw material availability issue, that is depending on the product to product and the company to company. But yes, you are right, we cannot quantify. But yes, in general, if I just put a blanket, all these agrochemical companies may see margin pressure if they won't be able to pass it on. Company-wise specific issues like Sharda, which is completely dependent on China for their supplies, and they have very less pricing power in the global market. This company is not dependent on India, it's a pure global company buying raw material from China and supplying into Europe and US and other Latin market. They may be significantly impacted if the raw material gets impacted from China.
Okay. Well, now, what about the gainers? Let's first talk about commodity chemicals, then we'll get to specialty chemicals. What's the scenario in the commodity chemicals? Who benefits, who loses out?
So as we understand that this Hubei, the entire province is a big chemical hub as well as the China is concerned. Though we are only talking about right now Wuhan as a district getting impacted, but there has been talks and there has been issues with the entire Hubei province getting impacted. There is a plant closure, not only just only a plant closure, but there will be labor shortage which also will be there. So we see that this chemical hub, which is a large for bulk chemicals, many pigments, dye stuffs industries, bulk chemicals, these are some of the commodity chemicals, intermediates which are large. They have a large production facilities. They will get impacted, and we will definitely see some price increases. Most of the Indian companies will positively impacted because of that. Just to give a few names like Kiri Industries, Bodal Chemicals, Akshar Chemicals, Sudarshan Chemicals, all these companies who are heavy on their dye stuffs, pigments portfolio, they will benefit because of the price increase which is going to happen.
Okay. The specialty chemical space, now there too, a lot of people believe that companies might benefit because, at least the integrated companies might benefit because their raw material, they might be producing in-house, but the prices of the final product may have gotten enhanced. Any thoughts here on companies within this pocket, which may be within your coverage universe, of course?
So in specialty chemical, yes, we cannot put a blanket statement, as I mentioned, in agrochemicals likely to be negatively impacted and commodity chemicals likely to be positively impacted. In specialty chemical, we have to understand going deeper in the company's product portfolio in general, but I believe that the impact on specialty chemical will be pretty limited and specific to the companies. There we see that further there are few specialty chemical companies which have exposure to even dyes, pigments, color pigments and all. Company like Aarti Industry, Atul Limited, these companies, because of their 15 to 20% portfolio, which is going to see the benefit because of the problems in China, yes, these companies are going to be positively impacted. But some companies of specialty chemicals who are dependent on raw material supply from China, maybe in case of like PI industry, they are buying some raw material intermediate from China, and if the availability issue happens, then they may be negatively impacted. So that is very case specific in specialty chemicals on company to company. But yes, like as I mentioned, that we see in general a positive impact on company like Atul and Aarti Industries.
Okay, before we wrap up this conversation, Rohan, coronavirus is one thing. The growth that these companies are dishing out is pretty impressive too. As you've looked at the numbers and within your coverage universe, which is looking like a really good bet. Are you able to share the name and the rationale there?
Yeah, so not just on commodity chemicals, we see that the sector is still, or that segment remain volatile. We are pretty gung-ho on the specialty chemical sector and have been positive on that entire sector from almost last 2 years and maybe more than that. We see that irrespective of China virus and all these issues in the short term will definitely get sorted out. But specialty chemical as a sector looks very promising. We are seeing continuous growth in the user industry in specialty chemical in India. We are seeing increasing export opportunity. We are seeing increasing inquiries, and we are also seeing the shift which is happening from China to India. So all these things are definitely driving the growth for specialty chemical companies in India. There we have been pretty gung-ho on the company like Aarti Industry, SRF, PI, even for that matter Fine Organics and Galaxy. In the specialty chemical space, these are 4-5 top bets which we have. Our right now favorite will be Aarti Industry.
Okay, Rohan, we'll leave it at that. Thank you so much for taking the time out and speaking to us and giving us your thoughts. So agrochemicals might not benefit, but commodity chemicals definitely benefit. Specialty chemicals, a very bottom-up scenario, but it's a talk. It's something that a lot of people want to know, and therefore this conversation. By the way, as we speak, the markets have come off a little bit from the levels that they were trading at. So the Sensex just about 0.56%, marginally off from the highs that we had at the start of the show. Let's just pull up the market breadth very quickly and see what's happened to the advanced decline before we move on to Fab Four. And has there been any kind of contraction? The broader markets were anyways underperforming, and yes, in the last half an hour, the market has certainly worsened, and we are now trading at the worst point of the day when it comes to the advanced decline ratio. Let's find out what's made it to Sharad Dubey's list of the Fab Four stocks of the day. Sharad, good afternoon.
Good afternoon. So the first stock I've picked up is Chalet Hotels. The stock is up more than 4.5% after it came out with the strong operational numbers. The revenues did increase by almost 12% and the net profit rose by 2.3 times. However, the margins did take a beating because of a forex loss of almost 40 odd crore rupees. Apart from this, the occupancy levels did increase by almost 30 basis points to almost 74.6%, and the rental and commercial revenue segment also did well. Apart from this is Inox Leisure I've picked up again. The stock is up more than 5.7%, seeing its biggest winning streak in almost 3 months. The stock has risen 14% in the past 4 sessions after it has come out with its results. And today itself, the stock did hit its lifetime high. In the management con call itself, the management stated that the FY21 screen expansion will be bigger than FY20, and also they are confident of opening 70 screens itself in FY20. The next stock is Sun TV Networks. The stock is up almost 5% after we are seeing a fresh longs, seeing high open interest of 18% and volumes trading at almost 3 times its 20-day average. And the last stock of the day is Wockhardt, which is up almost 8.5%. It's seeing its highest level seen in almost 8 months, and it's one of the top gainers of the Nifty 500 index. The stock has been up almost 33%, since January 27, since its results had come. Back to you.
Okay, Sharad, thanks a lot for bringing that Fab Four list for us. And markets, as Neeraj highlighted, has come off the day. Just want to pull up something like GIC-RE that's had a huge correction today. The stock's down about 11.5%, and you've also got a New India Assurance that too has seen correction of about 4%. If I'm not wrong, I guess GIC also came out with its earnings yesterday. Maybe the reaction is on back of that. Nifty is, by the way, off 60 points from the highs that we've seen, and Nifty Bank is at 31,300. Let's bring in Rajat Sharma of Sana Securities, who joins us to take his views also on markets and what should one do now when Nifty's already recovered from the budget lows that we've seen. Hi Rajat, good afternoon. Good to have you on our show. What's the approach now? We've recovered from the budget lows, but do you find any value at current levels? If yes, just tell us what have you bought recently?
Yeah, good to be on your show. I'm surprised that we have come back from the budget lows, because I do expect that markets would remain range bound and may not fall much from here. But for markets to come back the way they have on the broader indices from the lows we made around budget is a little surprising for me. Broadly, my sense is, and this may be slightly contrary view than what I keep reading and hearing about right now. My sense is that at some point the trend will reverse and a lot of money will move out of these large cap stocks and go into the mid and small cap stocks. And I think the positive trigger which I see why that may happen is because if you go back 2 years, in 2017 SEBI came out with this regulation which defined the universe of large caps and mid caps and small cap stocks, 1 to 100 by market cap being large caps and so on. And since then you've been seeing essentially the money flowing into equities. A lot of it is coming from the mutual fund world, and since that regulation, mutual funds have been restricted in terms of how much they can deploy in stocks. So a lot of the mid and small cap stocks, which naturally find place in small cap and mid cap funds, fund managers have been really restricted in terms of buying them. Now recently SEBI came out and said we're going to relook at that so that fund managers get more liberty in terms of where they deploy capital. That could be a trigger whenever that happens, where the top 10-15 stocks which have been running away the last 2 years, there will be a trend reversal, because there's a lot of value to be picked up in small and mid cap stocks. And clearly large cap stocks are extremely overvalued, much as everyone talks about. Expensive stocks in India keep doing well, large caps will keep running away, and mid and small caps will not perform. We all know that there are trends like these which run away for 3-4 years that can keep happening, but eventually the markets will reward companies that have a higher EPS, companies that make money. These are businesses listed. The businesses that will do well will make a lot of money over a period of time. This cycle seems like it's a longer cycle, but eventually things will fall in place. In terms of what we're buying, as I said, we're still focusing right now on small and mid cap stocks. I think whenever that trend changes, a lot of small cap stocks in pharma, auto, even real estate is one sector which nobody seems to be talking about. We picked up a small real estate company which is it's taken us a while to add it, which is Karda Construction. It's a small Nasik based real estate group which is into commercial real estate, and the good thing about them is they're in affordable housing, and it's a small company with about 170 crore of market cap. It's got very clean, clear books, very efficient management. And I think as the money moves into these smaller and mid-cap stocks, these are the kind of companies which will do well. And real estate as a sector, I may be one of the very few people talking about it, but I think it's poised to make a comeback at some point.
Okay, let's see if, of course, Nifty Realty Index was up over 50% last year, but the gains were also skewed due to high-weighted stocks doing well. Oberoi, Godrej Properties, all of them moving high. I want to pull up the intraday chart of Nifty FMCG Index. I think that's corrected, and it's at day's low now. A lot of these FMCG stocks maybe could be witnessing some bit of profit booking. It's in the red, so pull up something like United Spirits, which is the top loser of that index. It's down about 2.5%. I think just 2 or 3 days back, United Spirits was at 52-week high. You've got Godrej Consumer, which is down. Jubilant Foodworks is corrected. Dabur seems to be also at the lowest point of the day. That's also corrected from the high levels. And HUL, I think for majority of the session, it was not doing anything. Look at Dabur India, it's at day's low. But I think last 5 or 10 minutes, you are seeing some bit of selling pressure. 2 more stocks I want to highlight, Bata and Britannia, which is, by the way, a part of the index. Both these stocks have been falling for the last 4 sessions now. Bata is down 1%. Britannia also down about 0.5%. Sacchitanand, if I could come to you and take a technical check on the entire space, or maybe whatever you're tracking, are there any signs of shorting coming in, especially for stocks which have been down for last 4 sessions from the likes of Bata or Britannia India?
Well, Navneet, in fact, last week when I was on your show, we discussed Jubilant Foods and we had deployed a short trade on that. A very similar setup has been witnessed on Bata India right now. If you look at the entire price sequence, the stock has been, in the right way, scaling higher, and it has been maintaining its sequence of higher tops and higher bottoms on the price. But if you look at the RSI or the corresponding values, there probably we have already seen a breakdown of this particular sequence. Now, if you look at last 3 trading sessions, we have seen the cycle of long unwinding getting changed, and probably if you look at today's session, we have an open high on the futures at around 1844.50, and the open interest has been significantly higher. So the entire summary looks like there are fresh shorts which are getting added in this particular counter. We are expecting that the recent swing of around 1780, 1770 could be revisited. So fresh shorts can be deployed on Bata India. The stop loss for the trade should be placed at 1833 on the futures. The future is trading somewhere close to 1812 right now. So I think it's a very sweet spot again for some fresh shorts. And from the FMCG space, now it's Bata, which is showing some good signs of weakness.
Rajat, coming here in the FMCG pack, if you've been tracking this one, of course, majority of the stocks are quite expensive, but we've still seen them moving higher, and slowdown is quite palpable, especially in the rural market, which has been hitting the financials of most of these companies. Is there anything that you're tracking closely, or maybe ITC? There are reports that they've finally increased prices. They will pass on that impact of higher duty which was levied in the budget. Do you think ITC, which has been trading at below its historical averages, can be a good value bet?
Your voice was distorted, but I think I got the question. It's about FMCG and within that ITC. Personally, I think ITC is one of those stocks which, whenever you get below 20, 21 price earnings multiple, you should add that to your portfolio. Now, it's been trading there for the last 2-3 years, I know. But then, if you were to make a portfolio of stocks which you want to hold for next 10, 15 years, you will not get these kind of stocks at the price at which they're trading right now. It also pays a 3% dividend, and, it's the problem with ITC, as I see, is not the hike in excise duty or, volume suffering. The problem with ITC is that they're not using their cash the right way. I think this is a company which is sitting on a gold mine and is trying to do businesses here and there. They should stick to their core business, and at some point that will happen. They sell 4 out of the 5 cigarettes sold in India. That's their market share. 80% of cigarette markets in India belongs to ITC, and this is a very aspirational product. Unfortunately, even now, everybody in India, it's one of the fastest growing markets in India, cigarettes. So excise duty hike and prices of cigarettes going higher could probably dampen the stock for the next 2-3 years. This government, ever since it's come into power, has again and again raised the duty and the sort of taxes on cigarettes, but no amount of taxes can permanently dampen the spirit of people who smoke, which will sort of slow down or kill this market. I think in time whenever the bounce back in this stock comes, it will bounce back really, really sharply, and the stock will trade much higher. I mean, no doubt on that. So I think, yes, this is one stock you should add. In fact, the other stock you were talking about, Britannia, I think even at the valuations at which it is trading right now, 56, 57, it's a great buy, because that's again one of those stocks which has been growing so fast that the multiple on that has never really come down to these levels, or has always remained around these levels. So, you know, these are stocks, HUL, Britannia, or you know, ITC, where valuations don't really matter, not because of any other reason, but the markets for these products are growing really, really fast. They have you know, a lot of markets to capture even right now. So I won't be surprised even if there is a correction, these stocks remain expensive. Yes, temporarily they may fall if there's a deep correction, but don't expect these stocks to become really cheap. ITC in particular right now is definitely you should add to your portfolio.
Let's also talk about some of these auto names that have bounced back really smart. Maruti is now back above 7,000. Eicher Motors, they should pull that stock up as well. Post its results, it pulled back quite a bit. I mean, you saw the stock crossing about 20,000. It's come back down to about 19,000, closer to those levels. Rajat, within the auto pack, while you know, the sentiment is still damp, you're not seeing a real pickup even in the monthly auto sales numbers, and it looks like the two-wheeler space is getting hit more than the four-wheeler space. How should one approach the segment as a whole in terms of making fresh investments?
You know, auto is one sector which is available at as cheap a valuation as you've seen ever, you know, in the past 10-15 years. I don't remember auto stocks becoming so cheap any time in the last 10-15 years. And you know, right now if you see Tata Motors, Maruti Suzuki, all of these are available at very, very good prices. The reason for them falling to this point may well be because, you know, there's a shift towards electric vehicles, and a lot of people have in past delayed their decision to buy vehicles. There's a lot of capex that these companies will have to do, which the market is worried about. But valuation wise also, if you see, they're available very, very cheap. Two-wheelers in particular will have to make that shift the first, because, you know, 100 cc or less had to make that shift before 1st of April. I believe that's what the government said. Anyways, the pressure on them to change technology is the most. Having said that, I don't think there would be newer companies which will enter into the market and eat into the market share of, you know, Hero Moto or TVS. I think these are the companies which will supply those electric vehicles to the market. So these companies are going to stay, because, you know, in India, where the consumption for two-wheelers and three-wheelers is so high, it's you know, the main mode of transportation for the mid-income segment, and which is huge in India. So I think eventually the prices for these stocks will bounce back. So this is definitely another sector which, despite extremely expensive valuations on the market, you should buy into your portfolio a couple of two-wheeler stocks. Tata Motors, you will not get these stocks at these prices 4-5 years from now. So you know, if you had the money which you could put away, don't wait for it to, you know, go down another 10% or 15%. Just buy it and hold on to these stocks in your portfolio.
Probably be a slightly longer wait, but that's what Rajat believes, that it could be a turnaround story, probably of, you know, a few years down the line. Nonetheless, for that period at least, there could be some better options available in the market. But anyways, it's time now to take a look at what dealing rooms are recommending. Darshan Mehta is here with his channel checks for the afternoon. Darshan, you know, what are your channel checks telling you?
Yeah, so one of the stocks that's been spoken about is Glenmark Pharma. It's done well, you know, trading close to, you know, key daily moving averages. It's moved up on decent volumes today. Some of the dealers have indicated that some of the HNIs are actively accumulating the counter. The other one is Siemens, which came out with results. Even though the EBITDA margin number, the percentage was much higher, the absolute EBITDA was slightly weak. There was a big miss as far as the top line is concerned. Commentary was rather weak from the management in the press release. Dealers indicate that at such valuations, they believe that there could be a bit of correction that could come in on the counter. And IndusInd Bank is something that dealers are indicating. It's moved up on decent volumes today, up 1.25%. Some of the domestic mutual funds are actively accumulating this counter.
Okay, Darshan, thanks a lot for bringing that dealing room check for us. Just 10 minutes to go for markets to shut shop. So let's get you some closing strategies from our techies. Amar Singh, any BTST or any STBT for tomorrow's trade?
Yeah, I would say that one can look at Shriram Transport Finance. The stock is trading positive, and technically, if you look at it, it's positive on the charts. So currently, it's around 1220 odd levels. So one can look at buying around the current levels with a stop loss below 1200 and a target of 1255 on the upside.
Okay, that's a buy on Shriram Transport. Sacchitanand, your closing strategy?
To add one more short trade, in fact, if you look at the entire auto play, on the auto index itself, it looks like we have seen a double top, and the confirmation of this particular double top will be certain below 7800. So with that perspective, if you look at some of the auto stocks, there is some weakness which has been witnessed in Amara batteries. We have already seen a decent downside from the 800 levels, but if you look at the current data, there's a conversions on the short-term averages, which is indicating that there could be immediate momentum in this particular counter. The stop loss for the trade should be placed at 773, and a downside could be open right up to say 735, 725 kind of a zone. So fresh short should be added in Amara from a positional perspective. 773 should be the stop loss.
Okay, and the stock's also down about nearly 2% in trade. Remember, the markets have come off. We've been highlighting that. So most of the stocks which were trading higher have also come off from the highs. For example, Indiabulls Housing, which was up 10% at one point of time in today's trade, is now, I think, up only about 5 to 6 points. But there is one stock which is sustaining its gains, and that's Gail India. That's also your top gainer on Nifty. The numbers came out yesterday. Maybe the fine print looked better. Good dividend, 5% of market price was the dividend declared. Hence, you saw the futures also converging with the spot. But last 1 year, remember, has not been that great for the company. And in fact, with today's move, it's crossed the 100-day moving average as well. Amar Singh, on the charts, the sort of moves, sustained moves, I would call it. I'm not seeing any fresh long positions, at least on the future side. Open interest is still flat. But would you take a bet on Gail?
Yeah, looking at the way Gail has been trading in the last couple of days and also post the result, it's been a strong day for Gail. However, if you look at it technically on the weekly charts, what we are seeing is that somewhere the stock has got a resistance around 130, 133, 135 odd zone. So ideally, if those who are long, they can look at booking profits around those levels. But I wouldn't recommend fresh long at the current levels.
Okay. Just want to also look at some of the sugar names. There's some commentary that has been made by Avinash Verma. He's the Director General of ISMA at the Dubai Sugar Conference. They're talking about Indian producers in talks with Indonesia to have the world's largest raw sugar importer accept its supplies. So talking to Indonesia to accept its supplies. He's also said that the world prices have moved up, and they've moved up quite significantly. So therefore, that makes Indian exports more attractive for Indian sugar producers, which are making a small margin on exports right now, versus a loss in the earlier season. They've already contracted about 3 to 3.5 million tons of sugar for exports. Shipments are set to reach about 5 million tons by this season. So most of these stocks are pretty active thereabouts. Rajat, a quick take on sugar as a pocket?
No, I don't track sugar. I've never really bought a single sugar stock, and I advise everyone not to do that. You don't need fundamental study to buy sugar, nor technical. You just need to be an expert at government regulations. So, there's nothing in this sector based on which you can make a decision to buy or sell. So, no, nothing on sugar.
All right. Anything else that you are particularly, that you like and you would recommend?
Yeah, at this point, I'd like to keep things diversified. I've spoken about a couple of small cap stocks that I have in your portfolio. I think the same stocks that have been doing well, the same sectors that have been doing well will continue to do well. But one thing we've done is we've moved a lot of money from large cap names into small and mid cap stocks. So we're sticking to banking, but I've added more of Federal Bank and IDFC Bank, which are, the two banks that I like a lot. I think housing finance as a sector after DHFL has fallen out will do well, because a lot of the market share, that was the fourth largest housing finance company, a lot of the market share of that will come into the remaining companies. Canfin Homes is a company that I really like. The loan book is growing about 20% year on year. They've still got NPAs of below 0.5%. They're a prime target for acquisition. Since the last time I was on your show when I recommended it last, it's already run up about 30%, but even at this price, I think that's a great stock to buy. I've spoken about FMCG, I've spoken about auto. The other thing that we've done, and I'm recommending most retail investors to do, is buy a few stocks in the pharma space. And if you can't select stocks, buy a large cap, buy a large pharma fund which invests into top 5-7 stocks in the pharma space, because you never know which is the next pharma company to receive some kind of warning letter from the US. But right now that sector as a whole is at a point where if you buy 4-5 top pharma names, you'll still make around 15-18% year on year on a 5-year basis. So that's another sector where you could stagger your investments and buy a few stocks.
Okay, Rajat, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time today. It's about 5 minutes left for the markets to shut shop. The big winner today has to be Gail, 6% on the numbers, 129. Only yesterday, Probal Sen was here and saying that Gail looks very attractively valued, and when an undervalued stock comes out with good numbers, you tend to have such a move, even if it's usually a sleepy stock. It's 6% in a day is a lot, Amar Singh. But if you were long in Gail, I know you've already given that call here. What are the targets that open up because of such a move?
Yeah, I would say that Gail, if you look at it technically on the charts, it is on the monthly charts, it's moving from oversold territory after correcting from almost 200 odd levels. And on the daily charts, it's been a very strong move for today. Volumes have also been significant today. However, what we are seeing on the weekly charts is that, as I mentioned, the stock has got resistance around 133, 135 levels. If that is taken out, then the stock definitely has the potential to rally towards 145 odd levels.
A small stock which has actually done well, Sacchitanand, Uttekar, look up the charts of MAS Financial, not Max Financial, but Mass Financial. That stock came out with good numbers, and since then it's actually gained. And if you look at the 6-month chart or a 1-year chart, unless I'm very wrong, you will see this stock having performed very well at a point of time when a bunch of other NBFCs are struggling to do that. 90% over the last 6 months alone. How do the charts look out here, Sacchitanand?
Well, the price action has been very strong, but if you look at the volume action, there has not been significant volumes here. But certainly, it is one particular counter that should be held on unless we don't see a closing below 1080. I don't see any, signs of any correction immediately. But definitely it's in a very healthy territory. But if you look at from a projection perspective, there is no pattern which is indicating any particular price targets. So definitely something that should be held on unless the previous swing is not breached. So ideally, if someone is holding on to this counter, 1080 would be the trailing stop for any particular longs that they have.
Okay, Jaman, stay on. We'll just take in closing thoughts from you. But here's how the markets are shutting shop. At the start of the trading day, you probably would have taken this. You would have anticipated this as well because the rest of the Asian pack was doing well. But we're likely to end or going to end just a bit off from the highs of the day. The mid caps and the small caps have underperformed compared to the large caps, so very flattish close. I reckon the market breadth is not the most optimistic, but nothing to not dire states either, and we'll talk about that in a bit. S&P, the BSE 500 incidentally ending up about 0.4% higher. But what's gained or lost on the large cap space? Let's talk about that first. We spoke about Gail just a minute ago, up 6%. JSW Steel, Bharti Infra, NTPC are amongst the others which have done well. Autos have done well because there is a Maruti Suzuki, Bajaj Auto, both of which are in the top 10. And State Bank of India logs in some gains. It was one of the top calls this morning and up about 2%. What's not done well? Small losses for Yes Bank, small losses for Bharti, BPCL and Nestle, but nothing too dramatic really. IT may have selectively taken a bit of a back seat simply because it was a day which favored maybe some risk taking, at least on the large caps. But yet another day wherein small caps are underperforming. These days, there are quite a number of times when the mid caps and small caps are underperforming the large caps. Navneet, how have individual movers looked like?
Well, there were gainers, losers, so it was a divided house, though overall broader markets definitely underperformed, and market breadth also was just about even or marginally in favor of declines. So let me begin with a couple of gainers. You had Indiabulls Housing, which rose as much as 10% intraday, but it's finally closing. It's come off the high levels, and remember, it's a high beta counter, and most of the bets around the stock are more of speculative bets, so 6% high here. Pharma as a pack has been bouncing back. So Divi's Laboratories, that's been trading at live highs, and the sort of activity that you're seeing on the cash side, there is a lot of delivery-based buying also happening. So today's data was also suggesting nearly 50% of the traded quantity is delivered, and 3% almost at day's high. Aurobindo Pharma was the other one, which continues its momentum on the upside, up almost 1.3%. Sun TV, and we've been highlighting how after many days the stock's back in focus. It's moved above the 200-day moving average. A lot of long positions were seen on the future side. 5% gains coming in here. Result reaction from Kitex Garments. They posted profit of about closer to 35 crore versus 12, which was seen in the corresponding quarter. And right after the numbers came, you saw that buying interest in the stock, closing with gains of 12.5%. From the banking space, RBL Bank was up and about today. So I think bucking the trend. A lot of the PSU banks, however, were down today, not the private ones, but within the private space, RBL Bank performing well. Balkrishna Industries was at 52-week high, and this one also gaining, up almost 3%. On the losing side, GICRE saw significant selling pressure, and the numbers came in yesterday, and throughout the session I don't think you could see any bout of recovery also from lower levels, closing with cuts of 11%. New India Assurance also did not fare well in today's trade. That fell by about closer to 4%. D-Mart, after a spectacular run and a successful QIP, some profit booking kicking in today, so that stock's closing with cuts of 3%. United Spirits was also down. Some profit booking was seen here as well. Petronet LNG earnings reaction, it was down almost 3%, and you had something like Nalco, which reacted to the numbers. They posted a loss this time around. The street did not like that. The stock's closing with cuts of 5%.
All right, the indices have done their bit today. They've recovered thanks to the larger heavyweights on the index, but not at the highest point of the day, but above 12,100 on the Nifty 50. It's closer to 78 odd points, but that's probably, not a reflection on the broader market space. Bank Nifty is up about 234 points, and the Sensex up about 237 points. The broader market space not done a whole lot much, underperformance in today's session. But the point contributions that come up next in terms of, the gainers versus the losers, you've got Reliance Industries has taken the bulk of the weight along with HDFC Limited and ICICI Bank. What's weighed down is M&M, a secondary on a trot, along with Bharti Airtel and TCS.
Okay, so that's about the Nifty contributors, but pull up the market breadth as well and tell you what happened in the entire listed universe of National Stock Exchange. And there you go, in the last half an hour to 45 minutes of trade, I think we're closing in favor of the declines. Volatility cooled off with markets surging, and the India VIX is closing below the mark of 14 with cuts of about nearly 2.3%.
And turnover in today's session, we've got 34,700, so the trend is turned down. It's slightly lighter in terms of the overall trading activity, 11.5 lakh crores on the futures and options side. Amar Singh is still here with us. Amar, a quick closing comment and what to watch out for tomorrow?
Yeah, I would say that Nifty closing positive is definitely a good thing, but overall 12,150, 12,200 zone for the Nifty futures is something of a very strong resistance zone. So taking that out and sustaining above that level, then we could say that yes, Nifty is now poised for higher levels towards 12,350 odd levels. On the downside, however, now we are seeing that Nifty is having very strong support coming around 12,000 to 12,050. So it's a very narrow range between 12,000 and 12,200 that we see Nifty trading in the short term.
All right, we leave it at that. Amar, thanks very much for joining us this afternoon. And also on that note, we wrap out here on Countdown. From Neeraj, Navneet, myself and the entire team that's put the show together. Thank you so much for watching.